Subramaniam, Group President and Head Equity at UTI Asset Management. Vetri, good morning. Good to have you on the show. Uh, are you still finding enough stocks to buy right now at current market levels and the kind of big rally that we've seen?
Yeah, good to be here, Anuj. Well, it is a bit of a challenge because the market sort of moved up quite a bit, not just in terms of prices but also in terms of valuations. So you have to really dig much deeper to see what is really left in terms of stocks that still offer attractive valuations and where you think growth expectations are not fully built into current prices and valuations. So it is certainly a lot more challenging at this point of time. I think, as far as the economic cycle is concerned, there is a fair bit of hope about, the next 2 years, seeing a little bit of a growth acceleration come through. And I think a lot of that is reflected in the strong consensus earnings forecast that we have both for FY18 and FY19. But, history suggests that we need to take, these forward earnings forecasts with a bit of a pinch of salt, given what's, happened not just in the last 4 or 5 years where they've fallen short, but also if you go back in history, these forecasts are slightly dangerous to rely on entirely. So I think from a valuation point of view, there are certainly challenges in this market.
Okay, Vetri, good morning and welcome in your new avatar. Just want to apprise you that at this point in time, the market is betting, looks like, more on Axis Bank as a potential candidate rather than MMFSL. Remember, all these are in the realm of speculation, but the expectation was that probably Kotak Bank is interested in MMFSL. In the last few minutes, this is the intraday chart of Axis Bank. That's up 1.5%. We'll pull up the intraday MMFSL chart as well. That's actually given up some of its gains, even if it is in the green. The Mahindra Finance chart is indicating that somebody is taking profit at higher levels. So we leave you to your guesses, but the market is trying to find out why Mr. Kotak has called a press conference today and why is he seeking money tomorrow. Vetri, I'll come to that question in a bit. But in your new avatar, are you continuing to see the gush of liquidity, no let up at all, domestic investor interest?
No, certainly, Lata. I think this is, something that is built up over a period of time, and it's good to see that local investors are, putting in money. And the even better thing about this is that, unlike in the past where we've seen, huge surges of money, those have tended to be more of, significant one-time allocations into the equity market and have very often proved to be ill-timed. But I think what's really changed in terms of the gush of money you're seeing into the market today is really the fact that it's coming predominantly actually through the SIP route, which means that people are actually coming in with a far longer time frame. They're staggering their investments, and hopefully that will give them a little bit more of staying power, as we've witnessed even over the last 2 years. I mean, if you actually think about it, Lata, we were at 9,000 even in March of 2015. 2 years later, we are still at 9,000, and the pipeline of money has only increased. And I think the good thing about this is in the past you actually may have seen a lot of disenchantment that the market has gone nowhere for 2 years, but this time around, because people are allocating small tickets and it's happening across a large number of investors, I think both their staying power and their willingness to long-term to commit themselves to long-term investing is making a very significant difference as compared to whatever we've seen in the past.
Okay. Vetri, hi, good morning. The activity is picking up, at least the talk is picking up as far as NPA resolution is concerned. Vinod Rai has now reached out to the PMO talking about various solutions that he thinks are plausible. According to you, what needs to be done urgently to address this situation, and how are you positioned in some of the PSU banks?
Well, I think the issue is clearly urgent because, we've gone through this whole process of, first of all, being very opaque about the fact that there are NPAs in the banking system. Then we moved to a system whereby RBI started to put pressure and said that they want all the banks to come clean in terms of, reporting the actual level of NPAs in their books. And then finally, we've also got, these multiple schemes through which they're trying to get a resolution or workout of the NPAs. I think it's very important that this gets gets eventually done, because it's, there's pressure both on the entrepreneur balance sheets as well as on the bank balance sheets. And if you really want eventually at some point of time down the road a new capex cycle to kick in, it's not going to happen till the entrepreneur's balance sheet is cleaned up and the bank balance sheets are cleaned up. Now the key issue over here is that in terms of the cleanup, I think we need to keep two elements in mind. One is that eventually many of these loans may have to be written down. And I think rightly so, as the point has been made, this is not a write-down of loan which should happen and the full benefit of that transferred to the current equity shareholders. I think the way we need to look at this is that this will involve a write-down not just of the loans, but also of the equity of the current shareholders in these entities. Without that, I believe such a solution would neither be economically a good idea and neither would it politically be a good idea. I think both the current equity shareholders of these enterprises will have to take a haircut and the banks will have to take a haircut. And in many cases, we have the underlying companies owning assets which may actually be assets which are infrastructure assets or whatever kind of assets which actually are capable of producing a good amount of revenue, cash flow, and servicing the loans if the loans have been written down. So I think it's in the nation's interest that these assets actually start to operate at full capacity and start to repay debt. But just that we'll have to write down both equity and debt, and I think that is where we're losing sight of the plot when we only talk about the write down of the NPAs and not about the write down of equity. I think certainly from a free market perspective, which is the model that India has chosen for itself, it cannot be the case that only the banks take the pain and the entrepreneurs go away scot-free. So I think the solution eventually involves making sure that both happen simultaneously.
That's a very valid point, Vetri. But if we indeed price in a haircut, PSU banks at current levels, looking at the valuations, looking at the under ownership, is it still a good investment?
So, I don't want to specifically comment on that, but, the obvious question that you have to then ask yourself is that if the bank loans have to be written down and there is a significant haircut, what happens to capital adequacy of these banking institutions? And when you look at that, you'll find that, across the spectrum, there are many corporate sector lenders, some of whom appear to have enough capital adequacy at this point of time to absorb the pain. And then there are some lenders which unfortunately don't appear to be in the position to absorb a significant amount of pain because their capital adequacy ratios are already very low. And I think it does happen in this case that many of these institutions actually are the government-owned PSU banks, and therefore I think as part of the solution, the government as the owner of these banks will have to take a call on how much money it is willing to put for place in these banks in order to ensure that capital adequacy is restored to adequate levels. So I think that will certainly have to be part of the process that the government will have to think through as to what will it be its contribution, because for whatever set of reasons we do have a banking system in which close to 2/3 of the banking system belongs to Government of India. It's majority owned. So as part of the haircut process, eventually you reach that conclusion where even the bank, the central government will have to pony up some equity capital to make sure this goes through.
Yes, clearly many stakeholders. But now I think the rupee strength is beginning to tell more sharply on the IT stocks. Wipro and Tech Mahindra. Tech Mahindra was actually in the green in the first 10 minutes of trade. So it's lost probably 2% intraday. The important point is what is coming home to roost is a rupee strength is not a good idea at all for domestic industry or for many domestic industries. And that's beginning to play now on other sectors and stocks as well. Vetri, just to come back to your earnings question, we are probably in a different milieu in this current year. I know we have thought that every second half of every year will be the earnings breakout year, and it has not turned out to be. But this time we have definitely a major tax reform. We have the Aadhaar linked to the PAN card. We have, external balance sheet, which is extremely strong compared to recent years. Crude is under control. Are the macros shaping up for this finally being the year when earnings growth will deliver?
Lata, I think everything that you said is a fair point, and it could very well be the case that this is the year. All I'm saying is that we just don't know, and we don't know for a variety of reasons. We've got another disruption coming up over the next few months in terms of GST, and again, maybe some of these issues will actually benefit a lot of our listed companies because these are actually companies which operate in the formal sector. But at the same time, I think there is some part of the economy which is feeling a bit of pain, both because of demonetization and I think in the months forward because of GST. Which is certainly disrupting the entire informal sector. Now, while this might be prima facie good in terms of the economy shifting from informal to formal, the informal sector remains a large part of the economy, and if incomes over there were to stumble, I fail to see how this will not eventually have a bit of a dampener on some parts of the economy as well. So I think the GST is another big disruption coming up. Is it a great reform for the long term? It certainly is, but it's sort of short-term impact of earnings I think are unknown. Longer term, we'd love to position ourselves for companies which will benefit from formalization of the economy, but in the shorter term, I think it's a bit of unknown. I think the whole global commodity trade, the reflation trade, also is looking a little bit more uncertain. As we've seen events play out in the U.S. and on Fed policy in recent months. So I would say in that sense we still need to take a pinch of salt as far as these forecasts are concerned, for no other reason than the fact that the future is uncertain. And I'll also say this much, Lata, that I think eventually there will come a point where the economy gains momentum, there is traction, and at that point you will find that perhaps the forecasts are again going wrong. Because they may just prove to be a little bit too conservative and the economy will do better and earnings will do better. So that's just the nature of the beast, and I think you need to learn to live with that.
Okay. Well, one pocket that's starting to move now is some of these white goods companies. So you have names like Whirlpool that have hit a new high today, and that stock is up almost about 4% odd. Even Johnson Hitachi is one more stock, a fresh high today, and that stock is sitting with a gain of almost about 2% odd or so. Before we let you go, Vetri, just a blank check question. If you had to rate for us the sectors that you prefer the most and the sectors that you would avoid here on, what would they be?
So just 2 points to make on that. I think, particularly given the UTI legacy and wide range of schemes that we manage, all of whom have very different strategies and very different thought process. I don't think there is one particular, strain of thought that I could identify that, every single fund is, overweight or underweight specific sectors. And the second point that I would make, honestly, is that, there are phases in the market where stock picking creates a lot more alpha for you than actually betting on sectors. And I think we've been in that kind of environment for a few years now, and I suspect it might persist till we see much more clearer macroeconomic acceleration. So I still think this is more of a stock picking market rather than focusing too much on getting the sector right. And our broad thought process right now remains that let's get the stock picking right rather than only focus on sectoral outcomes.
Yes, that's why in Vetri we trust, in fund managers we trust. Thank you very much for joining us today with your perspective, Vetri. It's been a pleasure speaking with you as always. Okay, markets now starting to get subdued. They always obey Anuj. He said that he doesn't see too much gains today. And clearly, at higher levels, there is a resistance.
Yeah, the point is that we are now in a well-defined band, Lata. There's no trigger to take the market out of this band. So, what you're doing is you're trading the boundaries. 9,000, you're going there. You're buying 9,200, you're going there. You are selling. And that's the point Ashwini was also making. By the way, pull out the intraday chart of M&M Financial. I know that's the risk in, approaching some of these names just based on rumor, buzz and all, because if you see the intraday chart of Mahindra & Mahindra Financial, from 345 all down to 323, I mean, it can catch you on the wrong foot. Similar could happen with Axis for all you know. It's
no,
gained so much
absolutely.
over the
It
last
was
3 days.
staring as possibly a wrong bet, M&M Financial, simply because, if you owned Kotak Bank and you had to buy M&M Financial, you would pay through cash. You would pay through your shares.
Yes.
Why would you pay through check? Was my guess. But really, all of us are still speculating, and we could have egg on our face.
Even if the MMFSL deal had to happen, the share price, I mean, if you go by the book value and all, the fair value of it's trading much above its fair value. So that's also a point, because it's NPA problem. I mean, look at the kind of asset quality it has.
Okay.
Point taken.
We'll take a break now. Given the ton of buzz around the banking space at the moment, we will chat with Shyam Srinivasan, the MD and CEO of Federal Bank, up next.